Welcome back. We are here now with Congressman Robert Pittenger, who's joining us from our nation's capital. He represents the 9th District, the Republican in North Carolina. A proposal passed the U.S. House last week that will roll back some banking regulations put in place after the Great Recession. The Dodd-Frank Reform Act changed the banking industry, put regulations in place to keep a financial meltdown from happening again. It also put in consumer protections. Now some say those regulations are choking off community banks in rural areas. As we mentioned, one of the co-sponsors of that bill, the Choice Act as it's known, is Congressman Pittenger. Good to see you, sir. Thank you for joining us tonight.
Tim, good to be with you.
What was wrong with Dodd-Frank, and what does this do that improves that in your mind?
Dodd-Frank, frankly, was a major overplay by the federal government. It was a takeover of the financial system. And what it did, it put your small financial institutions, your credit unions, your community banks, on the same playing field as your major international institutions. Now, the big banks, they're able to comply. They can afford all these unnecessary rules, but notwithstanding that, they can put the people in place and they can handle it. In North Carolina, Tim, since 2010, we've lost 50% of our banks. We've lost 3 more just in the last 60 days, and it's all because of compliance cost. They're having to merge with other banks or they go out of business. This isn't right for rural North Carolina, for rural America, or for cities. They have less options available, less access to capital and to credit for small business. The community banks, frankly, were the source for capital and credit for over half the small business loans. And small business is the part of our economy that really builds the jobs. That's 70% of our new jobs come from small business. So when a small business, an entrepreneur, they can't get access to capital and credit, they can't expand. What we did is remove these regulations from requirements by these small financial institutions, allow them to continue to grow and be accessible to the American people.
Congressman, was it possible to help those small banks, though, and not go, as some critics are arguing, so far in the other direction? They're calling it overreach, and some saying that banks are escaping heightened regulatory requirements, cutting back on stress tests, and blowing up the Consumer Financial Protection Bureau. Was it not possible to help those small banks and not gut so much of the other stuff in general?
Pure hype, absolutely hype. I served on a bank board for over 10 years, from the time we chartered the bank till the time we sold the bank. Tim, we knew who was creditworthy. We knew who we could extend credit to. Frankly, the entire crisis started not by Wall Street. It started by the government-sponsored enterprises, Fannie Mae and Freddie Mac. And they forced banks, along with the CRA, community compliance requirements, put down by the federal government, to force banks to loan money to people who are not credit worthy. At low amount of money down payment, easy credit scores. That's what created the financial collapse. It was because people were given credit who never deserved it. Banks know who's credit worthy. When we sold the bank, Tim, we had probably, it was less than 1% of defaulted loans, because we knew how to manage the bank. We didn't need the federal government saying, don't loan to these people, or you must loan to these people. The federal government needs to step back. Yes, we have rules, we have regulations. They're still monitored. You still have federal government coming in and doing their inspections, doing their reviews. Yes, but it was such an overkill. It strangled the goose that laid the egg, and that's why we have such a slow growth economy. We're growing at less than 2% during the entire Obama years. It was the only administration after World War II that never reached 3% economic growth. And that was largely due because we've strangled the economy through regulations and through a heavy tax burden. We need to be able to lift up these banks, allow them to re-engage the market. Markets work. You know, banks are going to loan money to people who are credit worthy. They're not in the business of losing money for their shareholders or for the bank. So let's respect the fact that markets work, and let's understand the fact the more the government is involved, the more they mess it up, whether it's dealing with veterans or health care or financial institutions. The federal government of the financial system did enormous harm to our entire economy. In fact, the very people Tim, that they wanted to help the most, they hurt the worst. Those were low-income minority people. Those people have risen the least. In the last 8 years, they've risen the least up the economic ladder of any other group. It's because the economy did not grow. We need to grow the economy, and the Choice Act was a very important factor in helping us rebuild our economy.
Why you say those were government lenders that created a lot of those issues back then? You're not trying to say that the big banks didn't play any role in the issues that came out of the Great Recession.
You know, what I said is we started it. Yeah, Wall Street could have never exploited something had we not created that environment. Yes, there were some bad actors in Wall Street who came in, but in our Choice Act bill, we have more punitive damages against fraudulent actors than we've ever had before. Wall Street did not endorse the Choice Act. They rejected it. They don't want the Choice Act because we have more damages on them for bad actors. So don't think this is a free hand to Wall Street. It's not at all. We absolutely tightened it on Wall Street even further. Just for any bad actor in this game.
Real briefly before we go, why the need then to sort of take the teeth away from the Consumer Financial Protection Bureau?
Well, just look at an agency who has zero accountability. The President of the United States cannot even fire this person. They get all their funding from the federal government, from the Federal Reserve. They're not even accountable to Congress. They're not accountable to the American people. When they need money, all they do is call the Fed and say, send me some money. They can receive over $600 million from the Federal Reserve with zero accountability. There's no agency who should be unaccountable. You have a director, Mr. Cordray, who's, as I said, accountable to no one. We want to establish an agency. It's not gutted. We want accountability within that agency. You know, they're giving you an example. They're building, renovating a building that they're leasing. They've spent over $240 million in a renovation of a building. This is more per square foot than any hotel in Las Vegas. It has waterfalls. It is incredible. And so they're just out of reach. But when they come in and testify, they have to put up with us for 3 hours and then come back in 6 months. And they don't have to account to anybody for anything. The rules, the compliance with the demands they put on financial institutions, automobile industry, so many people have been incredibly hurt because of very oppressive rules and unnecessary rules. Yes, we need rules, but I'm talking about the overreach of the federal government, and the CFPB was part of that.
All right, Congressman, this has gotten through the House. We'll see where it goes in the Senate. Now, we'll have you back on when we talk about that. Thank you for some time tonight, sir. Good to see you.
Good to see you too, Tim.
All right, time for one more.